sure that students really, and maybe how you got there. You could answer some questions and guys doing. I think you had some openings. You may know some of the people that I know. I think you may recognize Jack, Michael Nelson. I think they spoke to you. So you got the entire group. So go ahead, Nick. SEI. What you guys do again? Nick, can you hear me?
SEI is a global provider of investment processing and asset management. We have several distribution channels around banking, independent advisors, institutional clients, and private wealth. I joined SEI in 2011, right out of the master's in analytical finance, which is now the MFE, the Masters of Financial Engineering. I found SEI just at the standard, the job fair for master's students at Lehigh. And I started out on the technology side in portfolio rebalancing at mass scale. And for the last 10 plus years, I've been working in a variety of roles that all have revolved around some combination of portfolio construction and technology. My current role, I am the co-head and technical architect for our mass scaled portfolio construction build out that we're working on, which is a newer initiative that we started about a year ago, I would say, maybe not quite a year ago. So my day to day is really responsible for helping oversee the team, removing roadblocks on the technology side, doing technical architecture, actually designing the platform that we're building from a technology aspect, and then also weighing in on the quality of the portfolios that will be built on this, primarily working very closely with the more quantity investment management side that will ultimately tune the optimizer. So I did a stint actually for 3 years co-managing some quantitative factor-based portfolios. So this is all kind of within my wheelhouse, although I think over time I've drifted more to the technology side, but I still work really closely with kind of the quant portfolio construction guys, and especially with how involved they'll be in this initiative. So I think what's interesting to me about SEI, this initiative I'm on, it's new. I was able to push really hard to get it off the ground. And in the past, I've had similar luck with other projects within SEI. I think it's a company where if you have an idea, you can get your ideas heard pretty quickly. I tend to thrive on less structure, allowing more room for creativity, problem solving, and that all has gone very well for me at SEI. I think just seeing whether it be market needs or inefficiencies in what we're doing, I found that like the management's very open to hearing better ways to do things, or possibilities for new ideas. So that all has played really well for my entrepreneurial mindset, and I've gotten to work on what I consider some pretty exciting projects. I think what really keeps it interesting for me, being an IBE undergrad first and then doing financial engineering, is I have background in some computer science finance, obviously, and mathematics. And I get to kind of use a little bit of everything. No 2 days really look the same. I think my run has not been for more of a research oriented person. I did, like I said, as a quant for a bit, do some research, but I tend to not like the big research project. I tend to like more of the higher energy, solving the problem of the day, figuring out how to make a system work. I don't want to say troubleshooting, but there is a bit of that involved. But a lot of it is design, architecture, and trying to get something stood up, with either limited resources or with limited time. I really enjoy the engineering and the problem solving aspect of it. And I've been fortunate for most of my 10 years to have pretty exciting projects to work on. So
Nick, and this is something that we were talking just before you joined, is I had a discussion with, as you know, Dimitri Bianco, that every quant should know. And, he quit his job not too long ago because he felt that there was not enough things that, I guess, what you're doing. And is it fair to say that SEI is a type of companies, and even though I think you guys are pretty large, been around for a while, but you tend to have the mentality of a smaller company in terms of entrepreneurship and things like that.
yeah, I think we do. And I think for that reason, it's plus, we're in the suburbs. This isn't a 100-hour-a-week, Manhattan job either. I think, when you add those two things up, SEI really helps avoid burnout, because there's always something to keep it fresh, and you can balance your life more effectively than you could at, a more traditional quant shop. I do want to say, though, that on the flip side of that, it's definitely not a place for people that are research oriented or want to be super independent. I think a lot of things at SEI are very collaborative. And I've seen a lot of people get frustrated that are more used to structure being, hey, here's 5 people that just work on this part of the problem, which you might have at like a more traditional quant shop. People that are expecting that, or they just really want to get, the best, information ratio, the best transfer coefficient. They want to get, those types of people, I do think over time tend to get frustrated because there's oftentimes you're doing a little bit of everything. And I think what is interesting, is we've actually had some quants be at other places and then be at SEI. I think the ones that find it the most interesting are the ones that, or at least a comment that I've heard is, I learn a lot at SEI because I get to see the whole process end to end. I think when you go to a bigger place, a bigger company, you don't necessarily see the whole process end to end. I mean, I've gotten to see it all the way from data scrubbing, which is not the most glamorous thing, but super important, all the way through alpha signal research, portfolio construction, trade generation, and then pushing that into the ops flow, order management, which is not that glamorous either, seeing that go to a broker, just the whole thing end to end. That I think once you kind of get a taste for that, I think it's hard to just go and specialize in one little piece of it. You tend to look at it more as an engineer after you see the whole chain and say, okay, what's the weakest part of the chain? Let's go make that better, versus, grinding for incremental improvement, in your specialty area. That's a mindset for me that would be tough to switch to now. And I think that you have to be somewhere smaller to see the whole thing. The bigger guys are going to have more and more specialization.
Rodrigo, you have a question?
Yeah, sure. Hi, Nick.
Hi.
I do have a question. I've been working in a project about multi-factor modeling. Wondering if you use multi-factor modeling and optimization to actually model your processes. and how would you go about that?
Okay, that's a very open-ended question. The short version is yes, I have, and quite a lot actually. But I think at a high level, that's just a very open-ended question. But at a high level, I would, you have to start with, well, I guess a concept. I think I'll use this as the opportunity to talk about a concept I think is extremely important in industry. A lot of there's two halves to that. One is your factor research. So do my factors have excess returns on a consistent basis? And you can go and read a ton of white papers about that. And you'll probably get, some things like very academic, like here's a book to price, here's a momentum factor, here's a small size factor. You'll find all those very well documented. But I think then the second part you asked around portfolio construction, there's less academic literature on that. And commercial solvers have come such a long way that I find a lot of times people work on those that don't have as much operations research background as maybe would be ideal. But that there's a huge loss oftentimes, I think, in alpha when you are forward-looking excess return, when you go from just doing factor research where you're looking at excess returns attributable to factors versus what can I actually achieve in a portfolio that I have to rebalance in a realistic way. And that's kind of the idea around a transfer coefficient. When you go from factors to actually implementing those factors through stocks, how do you get the best possible outcome? And I think that's a good mix of art and science at that point, because everybody wants to publish how good their factors are. And I think what's sometimes lost is you could be losing a lot of that due to those pesky assumptions that you have more on the academic side, that when you go to the real world that you have real constraints, you have odd situations arise, your rebalancing schedule isn't optimal, things like that cause you to really not capture that in a stock portfolio. So I think if I could kind of go and give any type of project in this space, I would say I think it would be interesting to spend more time on that piece of research. Maybe how do we actually capture all of our factor return, and sometimes I think it's a feedback loop. Sometimes I think you actually have to tweak your factors a little. What might look to be the best factor on paper may not be as pragmatic to implement. There might be one that doesn't look quite as good, but is actually, there's stocks that implement, or a combination of stocks that you can get exist so that you can implement it more efficiently, and then it looks better. So that's just one relationship, if you were doing this for real, like in practice, that I think is overlooked, that I would focus on. But you got to get all the parts of it right, or the whole thing is not going to be good.
Yeah, that makes sense. That was a pretty complete answer. Thank you so much for that.
Sure.
Hey, Nick, who are your client? I mean, what does SEI do? I mean, who are your clients? Do you advise? Feels to me you're getting information from the outside and you're combining it and you're providing them with, I guess, analytics on portfolios.
Yeah. So SEI really, it's both technology and asset management. I think primarily technology, and it's to hedge funds, banks, and advisors primarily. So they'll buy technology services from us. I think that the investment piece, once you're kind of on one of our platforms, you get access to our investment products. You can, we actually now have channels where you can more directly invest with us, but the kind of traditional idea is like the easiest one to explain is like you're an advisor, you want to focus and spend more time with your clients. You use our technology platform to automate and organize, your client base. It gives it gives you some recommendations. It allows you to outsource, actually, you can pick from our product of mutual funds and other products that we have to implement the client goals. But really, like, and the private banking one is kind of similar to that. It's like, allowing, we're business to business for the most part. We want to allow different consumers of our products to focus more on their clients. I would say is the big value add, and a lot of it is through our technology solutions.
Okay. More questions for Nick.
Yeah, I have a question. So, hi Nick, my name is Ramos. I'm a first year at the MFE program. So right now, for one of the project we're doing.
Hold on, Ramos. Just 1 second. Nick, you might remember Ramos because he was there in 2019 when you did at the first conference.
Oh yeah.
Uh,
I can't say I remember completely, but I do remember.
You didn't interact with him, but that's how far back Ramos was back then. Cool. Anyway, sorry. Go ahead. Ramos.
Yeah. So we're doing a project called Falling Knife. So basically, trying to predict if the stock is basically in a danger zone about to free fall, and then also the part 2 of our objective is trying to see if the stock will return back to its original level before the fall, and also like how many days or what is the chance of that happening. So I guess my question is that at SEI, what kind of is there any like specific model that is used in-house, and in terms of trying to understand how the market is reacting and how there's a lot of noise revolving around the stock market, what is your opinion on creating a model or using a model whilst having to encounter all the noise and all the unpredictable things that's happening?
Yeah. I think that's hard. I think our answer is, when we build factor models, to find things that work over the long run, and hope, that's, things that have fundamental backing and consistent excess returns. In regards to short-term political events, I think trying to model, when's the next big crisis going to hit? Man, I don't really have a great answer for you on that.
I guess to shorten my question is that, I guess what is your opinion, or what is how does SEI do things while trying to create a model and still trying to create a long-term model and still taking count of all the unpredictable things while trying to come up with it?
Yeah, I mean, in the short term, I don't know if, especially in a crisis as things get more correlated, I don't know if there's like a silver bullet. But what I will say is, the more diverse you are, especially like if you have good factor diversity, that, like Cliff Asness from AQR wrote tons of papers about how, value and momentum work so well together, for example. When one tends to be doing well, the other one tends to not do so well. With a short-term crisis or short-term noise, I think the answer is you just have to, at least for more longer-term investors, you ride it out. And I think that's more like fundamental investing. If you went into like more of like a stat arb guy, or a guy that's using statistics, doing not necessarily high frequency trading, but higher frequency trading, those guys are using proprietary, really crazy proprietary models to try to figure some of this out. I do not have exposure or have not had exposure to anything, anything along those lines. I vaguely know some of the models that get used, but like I would not, you guys probably know more about it than I do. It's not an area, like my career has been focused, buy and hold, long-term factor out performance, portfolio construction, technology, scale. I'm not sitting there trying to figure out, when the next crisis hits, what stocks are going to plunge to zero and which ones are going to bounce
Right.
back. I just, that's not something I've been involved with.
Right. I guess that's why some of our data and that the model we're trying to create just doesn't necessarily make sense, because we're taking account of the past 5 years of so basically somewhere around 15,000 lines of prices, but with the COVID, Russia, and government printing a lot of money, people spending a lot of money, it just really doesn't make sense to us.
Yeah, well, I'll ask you guys a question. How do you predict what the next crisis is going to be?
You can't. That's why it's called crisis.
Yeah, exactly. So, and each crisis is going to help or hurt certain stocks more than it hurts others, although they do tend to get more correlated in a crisis. But yeah, I think you need a crystal ball. That's why I think at least my personal views on investing are, I'm more of a buy and hold guy. If you saw my portfolio, you'd think it's very boring. But it's done pretty okay. I think yeah, that's I think I've read, some papers and things around trying to predict more. But now see, when you go to this level, it's important you have to be multi-asset class. But there's ideas like risk parity, which I think has some merit at like a multi-asset class level, not necessarily within a single asset class. But you start getting into these ideas of regimes, like you're in, and then there's like a transition matrix, and you try to figure out kind of what regime you're in, and are you in a peacetime regime, like where everything's good, high growth? You have to define regimes, and maybe you could define some different crises. Like the next crisis might, here's hypothetical crisis A, crisis B, crisis C. Create these regimes, put them in a matrix, and try to figure out, the probability of transitioning into each one, and what the implications of each one being in. I think at a multi-asset level, maybe that makes sense. But again, I am talking kind of out of my depth here. I'm trying to give you some ideas, but please don't take what I'm saying as gospel. This is definitely not my area of expertise.
Okay.
Thank you so
Thanks
much.
for this, Nick. Anything else? Okay. So, Nick, thanks a lot for your time again, and we'll talk soon.
Yeah, sounds good. Sorry for the technical.
No, that's okay. We could hear you very well, and love the Lehigh University background. That's great. Your diploma. Okay.
All right.
Thank you.